Welcome to episode 61, I believe, of Exit Liquidity. Um, Today, a little bit of a different episode. It's just me today. Cedo's a little bit under the weather, but he's behind the scenes making sure everything goes smoothly. Um, Today, we have Regan from Lattice Capital. Regan, thanks for joining us, man. Appreciate it.
Yeah, thanks for having me. It's good to be here.
For sure, man. We actually don't Now that I'm thinking about it, we don't have too many funds on, or we haven't at least in the past. It's definitely something we've wanted to do more of because it's like we're a lot of our audience is very like degen and like crypto native, and like I feel like there's not a very significant bridge between those like two worlds. So that's like definitely something that I would
No,
like to bridge at some
funds
point.
are I, funds are they're trying to like figure out how the degen plays. And I think that there will be very like mixed success with their approaches there.
Yeah, I mean, there's definitely times where degens are trying to figure out how funds are playing too. So where's the originality coming from?
Yeah, my partner Mike had this idea, so I want to credit him, but like I always feel like kind of like just crypto traders like they kind of like doing things like VC funds aren't. Right? And so I think like airdrop farming, I mean, some VC funds get caught doing this, right? But like generally, it's not like a main strategy. Yield farming, again, not like a massive VC thing. And NFTs, same thing, meme coins. It's kind of more fun, honestly, probably. Like, the VCs have fucking lockups and all this stuff, right? Like if you just want to punt on tokens, you kind of want to front run the VC funds.
Yeah. Yeah, it's an interesting dynamic for sure, one that like I still don't fully understand. Yeah, well again, thanks for coming on. To start out, would love to just like hear a little bit about your background, kind of like who you are, how you got into crypto, how you ended up at Lattice specifically as well.
Yeah, so I started working in the space in 2017. I moved out to San Francisco for a job on the venture team at Angel List. They kind of had like this business around capital formation for startups, and so it was kind of like working adjacent to venture. And then we spun out a company called CoinList to build a similar business in crypto. So CoinList was kind of like the first regulated like token sale platform, still is like one of the most prominent, and I worked there for like 4 years. So I knew nothing about crypto when I started. Like I didn't know what an ERC-20 token was. I was totally clueless. And starting to like spend time with, a bunch of teams that wanted to do ICOs during that cycle was like a great way to meet like the worst people in crypto. So it kind of took me like 2 years to get over that hangover. But yeah, like that was kind of my start. I was fortunate. Like we helped launch Solana and Filecoin and Near and Celo and a bunch of like the largest layer one blockchains today. Kind of in parallel, like started doing some angel investing. So, was fortunate to meet teams like OpenSea and Dune and Axie like pretty early on. And then also in parallel built this like fundraising data business called Dove Metrics, which I sold to Masari in the summer of 22, and kind of all of those things like combined to helping launch Lattice in summer of 21. So we're an early stage crypto venture fund. Our thesis with the fund was that like founders would want to work with other founders, like me, my partner Mike. Like we've spent the last 6 years building companies in this space, and very few crypto investors like have that background. So yeah, we partner with like crypto founders on day one. We've backed some of like the largest kind of like consumer applications in the space, teams like CyberConnect and Galaxy and Layer 3. We've done like deeper infrastructure stuff, so companies like Immunify and Lagrange. And yeah, I don't know, we're excited.
Cool stuff, man. Yeah, I I I think the thing that like really, you know, put Lattice or put you guys on the map for me was and I think for a lot as well was Dove Metrics. That was definitely heartbreaking when you exited that one and I lost the free access for it. Can you tell us a little bit about like building that? What kind of what went into that? Yeah.
Sure. So it started with my like desire to try to like work in venture, and I think you look at most people's trajectory to this job, and like building a personal brand is a large part of it, right? And so I didn't really know how to do that, and like I didn't know that I had any edge at all. This is like maybe like 2019. But I was kind of like, all right, like what can I do to like help founders? Like what's like confusing for them? What's no one talking about? And this is like 2 cycles ago now. This is like a 2017, 2018 cycle. There were just like a bunch of like funds that had popped up. There were a bunch of fly by night operations. It wasn't clear like who was doing tokens, who was doing equity, how much money anyone had. And so I just kind of was like in the mix a bit just from my seat at CoinList. Like I saw, like I knew a lot of these funds. And so I just put together like a Google sheet. It was like, hey, like here's all the funds that are operating. Um, and I put like my Telegram handle on it. I was like, okay, if I got something wrong or if you have questions, just like ping me. And that's actually how I started meeting some crypto investors because they would ping me and they'd be like, oh, you're wrong. Like, whatever. Like, or like, please correct this. And then Pierre Chouville, who's like works with me at Lattice now, but like he DM'd me on Twitter probably 2.5, 3 years ago, maybe 4 years ago. Fuck. And we just started working together. Like I was doing some consulting work with crypto companies and kind of the go to market side, but he helped kind of push the business forward and really just had this idea of like, hey, like you just have this like Google sheet now of all the funds. No one's like capturing like the fundraising rounds, right? Which is what people really care about. Like the Crunchbase is a piece of shit product. Term sheet, a lot of the newsletters just didn't seem to have much interest in covering the crypto fundraisers. So we're like, all right, like let's just do it. And so we kind of threw together this like very simple front end website, just had like an Airtable database, and it was like, hey, we're just going to capture this data better than anyone else, and we did. Um, and then we started publishing this like newsletter, where just like called out all of the announced fundraising rounds every week, and like we would interview investors and stuff. And we got that business up to like probably like mid 5 figure subscribers. And I think like yeah, Dove Metrics saw a lot of traffic, and at some point it was kind of just like, look, we have this venture fund. Dove Metrics was never like our day to day focus. We should just do the venture fund thing, and we kind of tried ways to make like Dove Metrics fit into Lattice, but it was just kind of like different businesses. And so Masari obviously had spent a lot of time building a crypto like a data business in crypto, and it felt like a good home for it. And so we probably started talking to them in like spring of 2022, and then they ended up taking it over that summer.
Do you still have like any? I mean, you exited obviously. Do you still make use of their version of it at all? Do you still like keep in touch with them? Have any involvement?
Yeah, yeah, we still use it. We were actually doing like some analysis last week. I think they still have the better, like they still have the best data. I mean,
Hmm.
we pay for Masari Premium, so like I think their research is really good, but like yeah, people complain to us about like, oh, I don't want to pay Masari $70 or a month or whatever it is. So, there's some people who have like a free. I think there's like a few teams kind of working on free versions. But I don't know. Yeah, someone should do it well because like it's not rocket science. You just need to be diligent. But I
Yeah.
haven't. I don't know. I haven't seen anyone else like figure it out.
Hmm. Yeah. Yeah. That's interesting. Going back to like Lattice, I like what you said about like, founders want to work with other founders. They want that sort of advice and experience when it comes to investors. Have you noticed that to be like a pretty big differentiators in your conversations? Like, are you guys generally super involved like post investment? Like, if so, like how? What kind of stuff do you guys do for your portfolio projects?
Um, yeah, I think it can be a differentiator. I mean, I think most of the things that like VC funds sell founders that they help with, they tend to be kind of like fluffy. It's like, oh yeah, like we help you with strategy. Like, what the fuck does that mean, right? Like, not much. And so I think where we try to tell a different story, and I think it's a story that's true, is like, hey, you're building a decentralized protocol, like you need to launch it, right? You need to get the token out the door. You need to get the legal shit down. You need to get the accounting shit down. You need to get the token economics. You need to figure out how to build a narrative around this like technical product. Like we have done this for 40 companies, right? Like we know more than anyone else. And so I think it tends to really be like just leaning into like the tangible things we have done many times in the past and what we can do for portfolio companies. And I generally think that like we do that. We tend to be really involved in everything around like building the token, the launch, building narratives around these products. Like we published case studies on how some portfolio companies have like helped their early customers. And then everything kind of around commercializing a protocol, which like I feel like people would kind of call like partnerships and integrations. We have a proprietary CRM we've built of like everyone we know in the space. And so it's like, hey, you want to like sell to every L2. Okay, here's who we know at Arbitrum. Here's who we know at Optimism. Like, let's like work with you and refine the pitch and we'll make the introductions. So yeah, kind of everything around like go to market growth, commercialization, that tends to be where we've, focused most.
Mm. Yeah, makes sense. Definitely something that's in high demand. I think, especially for like the scrappier, like newer founders that seem to fall through the cracks. Definitely, like would be super valuable there. What about going the other direction? Like, what do you guys look for? You mentioned you're a thesis driven fund. What kind of stuff do you look for generally?
Yeah, so I think there's like a few angles to look at that. One is like what the company is doing, and the second is like who's building it. I think we generally think that like the most value capture is going to come from like market expanding companies. So companies that either get like a new audience excited about crypto or some kind of infrastructure that like enables that first set of companies. So the first side could be like something like a DePIN protocol. It's like Demo is an investment in our first fund. They have this like decentralized marketplace for auto data. Any consumer could just like either connect hardware or software to the Demo network and start earning tokens by contributing auto data, right? So it's like a new, easy way for people to get into crypto. On the infrastructure example, like Privy, which has like created probably by far like the easiest onboarding experience for crypto projects, like they're a more recent investment and they just make it easier for crypto companies to reach new audiences. In like the second vector of like who we want to work with, I think our general view is building companies in crypto is fucking hard. And like, yeah, maybe you back some founders in the bull market and like they're doing crypto because it's cool. And like that described a lot of like gaming founders in the 21 cycle. And then like the markets crash and you're like, fuck, I'm building a company for an audience of like 100 people. Like, I'm just going to go back to mobile games. So really trying to like deeply understand from first principles, like this team really cares and like they're going to keep doing this. That matters a lot to us. So that tends to be something, and again, it's like a subjective thing, right? Like you're never going to be 100 right 100% of the time. But that tends to be like, how we try to look at companies.
Yeah, 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 makes sense. Is there anything that's like exclusionary to that? Like, is there anything that you guys, I mean, obviously, like you mentioned, kind of like shorter term mindsets, I guess, but in terms of like different verticals or theses, is there anything that like isn't really up your alley?
So I think there's some ecosystems we just haven't done much in. Polkadot, Tezos, Binance, like we're just not to say there's not good opportunities there. We're less excited. None of us are gamers, so games just has not been a focus for us. Traditional businesses with traditional value capture mechanisms also not like a massive focus for us. So that could be like regulated exchanges, that could be crypto SaaS businesses. Just not like a core focus for us. I think I can like anything on the consumer side, we want to like understand that there's some crypto native value capture mechanism. And then like derivative plays like, oh, we're like the fucking like compound on Sui. I don't know, like kind of hard for me to get excited about that business. So yeah, that kind of I think a lot of the market just doesn't make sense for us.
Yeah, yeah, I think a lot of that stuff makes sense, definitely, given what you said earlier. Um, I'd be really curious to hear like what your take is on like meme coins specifically, like whether or not that is, because I know we talked a little bit about that earlier. Like, have you guys thought about that as a fund at all, or like maybe not even you guys specifically, but in general? Like, I know there definitely is like chatter, I guess you could say, of like, funds buying into whiff or whatever else it might be. Do you guys have, or either the fund or do you specifically have any sort of like a thesis there?
Um, I think meme coins are fun. I think they're cool. Like people should be able to bet on what they want. I have some meme coins personally. Like we don't have any in the fund. I so I think there's like two ways venture funds could get exposure to this, right? One is just buying meme coins, and like yes, some have. Asymmetric Joe McCann's fund, like he's talked about his bonk thesis, and I don't even know when they started buying, probably sometime last year, and that guy's probably made a fucking mint off that. So like clearly you can do well. If you bought Dog with at last year, clearly you've done well. I think it's pretty risky. Like uh, LPs are like inherently conservative people. Like generally, like if you're rich, you're like kind of more concerned with like preserving money and like slowly building it than you are on like taking a wild punt on meme coins as an example. And I just think that like if you lose money on meme coins, it's a very easy way to get fired from like doing your job. So maybe some like cheap like VC funds have been honest with their LPs and they're like, okay, we're gonna do this with like 2% of our money, and their LPs are cool with it, and like in that case, go for it. But I just think I don't know, like it's kind of a hard story to tell. The other way to get exposure to meme coins, I think, is to like invest in kind of adjacent infrastructure and applications. So that could be like, I don't know. I think there's like a bunch of prediction markets kind of popping up around like meme coins, right? Like as an example, or like, oh, we're building like, I don't know, specific decks for meme coins, or just like I know people are going to try to VCify it. And to me, that is like a fucking terrible way to invest in this. And I actually think an interesting analogy is NFTs, right? Like, if you just had bought a bucket of like blue chip NFTs, you probably would have done really well. Just like using like the penguins as an example. Like, I was never that into NFTs. I have a penguin. I think I paid like 3 ETH for it. It's now like, I don't know, 18 ETH. Um, Not many like NFT infra or apps have done well. Like, you would have done well if you did OpenSea early. You would have done well if you did Blur early, but like there's not that many other like massive outcomes on the venture side related to NFTs, right? Like you kind of just should have fucking bought NFTs. um, and now that's like looking at this static point in time. I think there are a lot of things that will do well in the future. Niftify is doing well. We have a portfolio company called Hook that has built some really cool like NFT trading infrastructure. Clearly, people want to trade these things. Like, it's not to say that there is not going to be any big outcomes, but like just looking from like start of NFT kind of like cycle to now, like pretty clearly you should just fucking bought NFTs. So I think like VC funds are gonna do these like dumb kind of like index plays because that fits more neatly into a VC bucket, and I think it's gonna go very badly.
Yeah, yeah. I guess the comparison to NFTs definitely makes a lot of sense. I'm having trouble coming up with a ton of like successful infra investments since we kind of like peaked in that cycle, and apes were going for 200 ETH or whatever. It really was just like the NFTs. I think what's interesting to me about like the whole meme coin thing is that, I mean, obviously things are like frothier than they've ever been in that regard, but at the same time, like some of the theses I'm seeing popping up around it actually really like resonate, and like they like some of them have been not from like funds necessarily, but from like pretty like sophisticated researchers just about like the attention economy, like betting on culture. I mean, like a lot of people believe that when you boil it down, like most tokens uh are just like betting on attention, right? And like the meme coin is the most boiled down version of that. It is pure like nothing. There is nothing to it. You're just betting on a trend more than anything. So
Yeah, which I think is right. I do think people are a little bit quick to like over intellectualize these things. Like, I don't know, it could just fucking be fun, right? Like, I don't know that we need to like, apply this through like a cultural like criticism lens. And look, like there's been a lot of like narrative mirages in crypto. Like I don't know if you're around when like the fair launch thing like blew up. It was like Yearn did like the fair launch, and everyone was like, it's basically the idea like you'd have like all these tokens with no insider allocation.
okay, yeah, I
People
missed,
like, oh,
that
like
part.
crypto VCs are like dead, right? Everyone's gonna do a fair launch. Of course, that was like wildly wrong.
Yeah.
Um, and yield farming, like there were a bunch of like things built on top of that thesis. Yearn is like another, kind of also fits in that example, right? Where like if you dumped a bunch of money into like things around yield farming, like you would not have done well because like that zeitgeist just did not last. So meme coins have been, I mean, when the fuck did Dogecoin come out? 2014? Like meme coins have been around for a long time. And I'm not saying they're going anywhere. And like they are a very pure way to like bet on people's attention. And it's cool. It's fun. Like I like my Bowden tokens. Like it's a fucking good meme. But I just like it feels a little bit to me like VCs just like like that meme of Steve Buscemi like trying to like hang out at like a
Yeah.
high school.
Yeah.
Like, oh, like what's up, kids? Like
Yeah.
it kind of reminds me of that. Like just let fucking people punt on these things. It doesn't have to be this like,
Yeah.
Um
I think I referenced
yeah.
that exact meme when there was some like layer 2 foundation that proposed like a meme coin fund. And it's not the first time that has happened either. And to me that
Yeah, I
just like
think like yeah.
screams that.
I, I mean, I don't know. Crypto's fucking protocol foundation has a lot of money, and they probably spend it on dumber shit like sponsoring F1 teams. And yeah, look, it's not me like casting a subjective view on meme coins. I think they're fun. I think they should exist.
Mhm.
But not everything needs to fit in a venture bucket. And like, I don't know.
Yeah, yeah.
Maybe I'm wrong, and maybe they do. But like, I'm just a little bit skeptical of it.
Yeah, yeah, it's a fair take. Do you have an opinion on ordinals or like more broadly like this kind of new wave of like Bitcoin infrastructure, whether it's like L2, like Bitcoin Fi, I think some people are calling it. Is Lattice interested in that stuff at all?
I think the Bitcoin stuff is cool. Like, Joshin is one of the co-founders of Magic Eden. He's a very old friend. I remember talking to him like last year, and he was like, "Dude, like we're insanely bullish on ordinals." I'm a little bit like, I feel like people have been trying to make stuff happen on Bitcoin for like years, and it's never worked. There was like Stream, and then there was like, or sorry, Blockstream. There was like Rootstock. Like none of this shit really worked. And you know what? Like he was right, and now they're fucking Magic Eden is like printing money on ordinals. Um, I am bullish on it. I'm definitely not an expert. Like, I don't own any. But we've looked at some of these Bitcoin L2s. I think it has staying power. Like, look, you don't need to convert that much percent of like latent Bitcoin supply into DeFi for this to be like a massive business. Even fucking 1% of Bitcoin is what, like, I don't even know what the market cap today is. 800 billion? It's probably more than a trillion.
I feel like it's close
So
to
1% of that's
two
like,
almost.
okay, I'm wrong. So wait, so 1% has $20 billion dollars,
Yeah.
right? You don't need that many people to get excited about like the DeFi stuff, and like people want to earn yield pretty clearly. People want to gamble, so yeah, I think it has staying power. And I think it's an interesting category. I'm definitely not like an expert or super deep on it.
Yeah. Yeah. I think I think like ordinals, meme coins, maybe like some of the L2s have kind of like emerged as the like flavor of the week recently. Maybe like most of this year actually it seems like most of the chatter has been around that kind of stuff. And a lot of it is like, I mean, meme coins obviously aren't new. Ordinals are new-ish, I would say still, but these things are really like peaking in terms of the amount of attention they're receiving, and like, some of the L2s we're seeing, Blast, Base, even like Mode or like Mantra, or some of the other ones that had attention for a while. When you see like some of these new trends pop up, um, what really like makes it worth it for you guys to go deeper, for you to like, consider bringing something like that into the fund when it's something like that's that new and out of the box, I guess you could say.
Yeah. So I'll answer your question, but I think like to set this stage, I think like people underestimate the timeline that we operate on. So like to put in perspective, like we deployed our first fund like summer 21 through spring 22. So let's say we like more or less stopped investing that fund 2 years ago. We like maybe have 2% of the tokens that we will have. Like generally when we do a deal, there's always a year lockup and then vesting's over another 3 to 4 years. Um, Generally we're investing like 3 to 18 months before a token. So it can be like a really long time before we see liquidity. So for us, like making venture investments based on the current narrative, I think is kind of stupid. Now there's some exceptions to this. Like I think that the AI narrative like has legs, right? There's like external stimulus, things happen in AI and people are excited about AI, and I don't know that that's going to change anytime soon, but like I don't know, like doing a bunch of venture bets around fucking intents because people are talking about intents and like that's the narrative. Like anyone who thinks they can predict what the narrative is going to be in 2 years, like I will call bullshit. Um, so I think really what we have to be right on is like, hey, this team is just going to execute and they're going to keep focusing on doing what they are doing and be like they are savvy enough that like either A, they can create a narrative around what they're doing, or B, like they can recognize what the current narrative is and like shape whatever they are doing to fit within that. And like that kind of has to be the bet. And sometimes we're right and sometimes we're wrong. So like an example of like where we're right is like we invested in Demo um probably like September of 2021. And like, there it's yeah, it's a decentralized automobile like data automobility data network. You plug in your car and you earn tokens. And they launched pretty quietly maybe like a year and a half ago. And like the token was just chugging along. There wasn't a ton of eyeballs on it, but like the guys are awesome. They're really good. The number of cars connected to the network kept going up and up and up. And then like eventually Helium caught a bid. A lot of eyes went on Deepin and like this thing rocketed, right? And like the bet was kind of right, right? Like when we invested, Deepin was not a big thing, but it was kind of like, okay, this is interesting. It's something a mainstream audience can get excited about. And like we just need the narrative to fall on them at some point over the next few years. And we think this thing will do well. So yeah, to answer your question, I think it's like it's more kind of that than like, oh, this is like the current zeitgeist, so we're going to invest in this.
Yeah, yeah, yeah. That totally makes sense. I mean, given the time frame, like it just wouldn't make sense to do it the way that degens would necessarily. You spoke to this a little bit, and I had this question coming in, and I think that like this is this is an area where like venture funds and like normal people on crypto Twitter really differ, is kind of the split between team and product when evaluating an investment opportunity. I feel like for most of the people who are probably tuning in, and most of our followers, most of the people that you see like interacting on crypto Twitter today, it's like, product is most of it. Product is probably like 80 to 90% of what they can even see. We go into the docs, we see how this works, we try out the product. Sometimes, go and look at the metrics, see how that's doing. But in VC, I don't think it's that like uh, quantitative necessarily. What would you say the like if you were to give each one a percent? like or like a weighting, team versus product, what would you say?
I think team is like 80%. And I think the difference is like one, we're generally investing earlier. So there's like often not a product that like we can play around with. Sometimes there is, often there's not. And then two, like we're stuck with these things, right? Like, the cool thing about just like buying tokens liquid is like, oh yeah, if whatever the team stops shipping, I'm going to sell this. Or like, I think something else has like a better risk adjusted return. I'm going to sell this and go buy that. We don't really have that choice, right? We're stuck with these things for like generally like 3 to 6 years. So like, yeah, I mean, maybe the current product is indicative of what the team can ship, but like we need to really believe that like they're going to keep shipping for a long time.
Yeah, yeah. I think yeah, I mean in a way like most if not all of like token investing is venture capital by like traditional definitions. People don't have the same or like a normal like normal people who go in and just enter the market via Coinbase or whatever won't have the same luxury of like knowing the quality of a team or like actually like knowing their track record or the vision or anything like that. They kind of just have to use the product and go based off of that. So it's like an interesting distinction, I think, when a coin is liquid or when a product is live at that point. I would like to go back a little bit to like I know like the premise of like bringing you on in the first place was you wanted to kind of tell the like Lattice story. You wanted to talk a little bit about like who you guys are and where you've been. You alluded to it a little bit already, but would like to like would be good to hear like if I missed anything over there, if there's like anything you wanted to get into deeper about the fund specifically.
Um, yeah, I mean, I think we're always hesitant to like make the story about us because it's like not really, right? Like whenever we're working with a company, like we're supporting characters and in some cases we can like move the needle a little bit, but it's really like it's founders that do the work. But I think the way you see a lot of like VCs kind of try to tell their story through their portfolio companies is just like attaching themselves to their winners, right? So you see like every VC that invested in Eigenlayer as an example, right, is like really excited to talk about Eigenlayer because there's like positive brand association. So I think for us, it's like, yeah, it's more just like generally getting out there more, talking about how we think about the market, some of the investments we've made, and yeah, just like trying to like be more transparent about that because we just haven't done much of, if at all, like really any kind of like public facing work.
Okay, yeah, that makes sense. In that case, can you give us, or I get it's just me here. I keep forgetting Cedo's not here. Can you give me some of the names you like feel proud to attach like your own name or the Lattice uh the brand name to some of the successes or some of the ones who maybe most people haven't heard of yet that you think are going to be a big hit.
Yeah, so I think like one category we've been excited about that we've like started to see some winners in is kind of like crypto native, like consumer facing businesses. Forecaster gets like the most attention just because it's like, I don't know, the cool crypto kids are on it or whatever. Andreessen invested a bunch of money, and Forecaster is really cool. But there's like a handful of portfolio companies, Layer 3, Galaxy, and CyberConnect to be specific, that all have like an order of magnitude more users than Forecaster. And I think all have kind of like adopted these like different crypto native businesses, which is interesting. Like, I think Layer 3, most large protocols today kind of like work with them for, as like Layer 3 sort of built this like discovery platform, right? People do these quests, they try out new protocols, and Layer 3 has kind of built like a really dominant position in that market. CyberConnect is more focused as like a social protocol. They have this like Link 3, which is basically like a link tree alternative. And they've been at the forefront of kind of like smart wallet adoption. And they're now rolling like their own L2 for like social apps. And so I think like generally our view early on was just like companies that chose to monetize like their distribution or their user base in a crypto native way, like that was like just going to be interesting. We made all these investments over 2 years ago, so like it wasn't really clear how it was going to happen. But now I think like Blast is kind of the pioneer of this, where like you're Blur, you have like proprietary distribution, you have eyeballs on what you're doing, and you're like, well, what else can we do? Like, fuck it, we're just gonna roll our own L2, right? And like the innovation there was like not really technical as much as it was just like incentives and like leveraging your own distribution. And now like Blast is, I think it's the third largest L2. Whereas you have a lot of other teams that have done like a bunch of crazy ZK stuff, right? Or like they spent years like researching, ways to scale Ethereum, and Blast is just like, well, fuck it. We have eyeballs and we know how to like make users money. And you know what? Like that's kind of good enough for most people. So I think like we're gonna see more and more, teams that have built this proprietary distribution because it's really hard to do in crypto, kind of like go down the stack and like deploy more infrastructure. So that's a trend we're excited about. And I think a lot of the investments from, we made in that category, like we'll see take advantage of that.
Mm. Yeah, yeah, that's interesting. I guess people underestimate the power of like having strong distribution channels, I guess, and that's where like really backing a team or a person is what matters the most. Like if they have the distribution, then just taking that and shipping a killer product is I don't want to say the easier part, but like the some of the legwork is already done at that point. Um, you said that you guys haven't written a check in 2 years, is that right?
No, just sorry. All of those companies I mentioned were
Okay.
2 years ago.
Okay, that's right.
No, we've been pretty active. I think we're starting to like feel like it's not as good of a time to invest.
Hmm.
Just as things have gotten a little bit crazy. But we were pretty active last year and earlier this year.
Mm. Where do you so you're kind of thinking of like slowing down soon? You're or you already have like you do you have any type of feelings about where we're at in the market right now?
I generally think we're like still pretty early in this cycle, but I also like I think the cycle is going to be different than previous ones just because like the flows are very different with the ETF. So I don't want to like I say that with like medium confidence. Look, I think you like Bitcoin's hit all-time highs and like no one's talking about it. And obviously no one's talking about it is like a figure of speech, but like generally like there's not that much attention on the industry yet, even though like Bitcoin is just ripped. Um, and if you look at like Coinbase App Store rankings as a proxy, like yeah, like retail interest is like going up. It's definitely not here yet. It's definitely not nearly where it was like last mania. And I think these assets are reflexive, right? Like Bitcoin hits all-time highs, and so more attention comes onto it, and so the price goes up, which creates more attention. So like I think we are pretty well set up, and like you see the amount of inflows that can happen with the ETF, like it's non-trivial. It's a lot. Um, there hasn't really been like a new thing for people to do in like this cycle, right? Like we had like the DeFi, we had NFTs, the meme coins on Solana. Maybe that actually just is the answer. It's like a really like you can just punt on meme coins very cheaply, and like maybe that's enough. I don't know. It's just like it's a weird. I think it's a weird cycle. So I do generally think we're early and we have a ways to go, and like our book reflects that. But it's hard for me to imagine that this is like rinse and repeat like last cycle. Like it's probably not. And I think on the venture side, like earlier I talked about our timelines. Like generally, we have no liquidity for a year post TGE. So like all else equal, like we're probably out of this cycle in a year if history repeats itself. So in that framework, I think just like trying to ape into like pre-TGE rounds when like we're not going to have liquidity this cycle, like I'd rather just buy these things in the open market. we always joke internally, like generally you can buy any token at the price you want. It's just a question of like how long you're willing to wait. And so like yeah, assuming I mean maybe we're in a super cycle and like in that case we'll be fine. But assuming we're not, it just yeah, I don't think it makes as much sense to like ape into these rounds.
Yeah, yeah. That that makes sense. Is that like a I mean, you guys have been around for a while, obviously. Is that like a regular or I guess like a yearly, bi-yearly consideration you guys have? Like you sit down and have a conversation like should we start to slow down? Because at a certain point, like, lockups being one thing, valuations being another, obviously. Valuations are already like super high on the public, on the liquid and the private side, and it doesn't really seem to be slowing down just yet. So like another, like, 4 to 6 months of this, we start to see seed rounds in the close to 9-figure range with the same lockups. Like, like,
Yeah.
at what point do you guys like have to say, all right, like that's it? And is that like a regular conversation you have?
Yes, and it's hard to say because like we deployed a lot of our first fund during the last bull market, but A, like there were a lot of awesome companies in that fund, and B, like those teams were a lot of them were able to do follow-on rounds really quickly at big markups. And is that money in our pocket? Like no, like it's paper gains. That is whatever. But like the point is like those teams were really well capitalized going into the bear market. So like there, it's not to say there's no advantages. Like it does, it's not to say it doesn't make any sense to deploy money into the bull market because like teams can be well set up for it. And deploying in the bear market, like if you're too early and like we invested in some teams in like Q1 23, like it's hard, right? It's hard to build a company in a bear market. Like your customer set is small and people don't want to spend money and there's just like less users in like every category. So like sure, like yeah, you probably get in at lower valuations, but like it doesn't mean that it's easy for those companies to grow. So there's kind of pluses and minuses to like everything. But I think generally like being more active in bear markets and then kind of like cooling off in a bull market, obviously assuming you can time these things right, that has done well for a lot of funds.
Yeah. Yeah, I think the timing issue is a funny one. I think the example that really like kind of put it into perspective for me was Starknet. Not that they're like doing poorly or anything necessarily, or they're in too bad of a spot, but like they raised at like I think an $8 billion valuation back in like 2021, I think, and the token just recently became liquid at like a 15 billion or something like that, which is like, as far as I know, like not a great return in the world of VCs, but
No, and you're illiquid on it, right?
yeah, yeah. So like that's
Like
kind
what
of
could
like
you sell locked? What could you sell those locked tokens for? If like the liquid FTV is 15, the value of them locked is probably less than 8.
yeah, yeah, definitely. That definitely like helped me realize like how important timing is when it comes to this stuff. I've also never heard like I've never heard a VC also kind of approach it from the like team's perspective of like, you get in at a super low valuation, but like the most that may not be the most beneficial thing for the project themselves, like to have to give away a larger share of the company, or to maybe not be able to raise enough to get through like a longer bear period. I feel like most at least at a time like now, most would look back on periods like that when valuations are low and think that you should just be like firing left and right, really, as long as assuming you have the capital to do so. That's like with the benefit of hindsight, of course.
Yeah, and honestly, the benefit, like a lesson we learned this cycle, and one I don't intend, a mistake I don't intend to repeat is like even more than deploying into venture markets when everything is super low, is you needed to be like backing up the truck in liquid markets,
Yeah.
because those valuations like they come down more than they do on the private side, and they'll go up more than they do on the private side, and you're liquid.
Mm. Yeah. Yeah, definitely. Um, Out of curiosity, do you do any personal liquid investing yourself?
Yes, I don't like trade tokens, but I have, I don't know. I probably have like 10 tokens in
Mm.
size that matters to me. Bitcoin and ETH being the biggest ones. I have some tokens from like personal investments that I just never sold. Um,
Mm.
so like some Ribbon, some Axie, some Ronin.
Ribbon's Avo now.
Um,
It's not Ribbon
yes,
anymore.
I have some meme coins.
Nice.
But I honestly like, I don't, yeah, I don't, I like, I'm not actively trading these things.
Okay.
My
My
mind is like, yeah,
yeah,
I don't know. It's hard. I think it's hard to like do your PA well and the fund well.
right. Yeah. My like follow-up question there was going to be like when it comes to making investments on like the liquid market, what do you feel like or have you feel like you've learned anything particularly useful from your like time and venture in making those decisions? Like stuff that that people like me or our viewers might be able to take away when it comes to buying whatever AI coin launches next week.
Yeah, I mean, I think like sizing matters. Like, yeah, you want whatever you have on the like in your PA, where like if it 10x's, like you want that to be meaningful to you because it's not that easy to like find a 10x. So like for example, like going into this cycle, I had a bunch of like I had like my ENS airdrop, and I had like kind of like I don't know random tokens that were like maybe like 2 to 3% of my portfolio each, and I like sold all of them to like just consolidate into like a few bets. I think another like lesson is just like betting on like the fastest horse is generally a pretty good strategy. So like you could probably underwrite larger returns in the AI category, punting on some random token, but like you could also just buy BitTensor. And like if you believe this category keeps running, kind of requires like new people to come into it. And it's like, okay, like what are people going to enter first? Probably Tau. So I think like that's something to think about. I think like do old tokens make a comeback is like something I've been thinking about. Like I have like a I don't know, I have some Aave personally, and I'm like kind of split. I'm like I don't know. Like on one hand, like this is a blue chip. Clearly Aave like serves a purpose. It's also not a new thing, and like generally like there's like a premium on new things. So I'm on the fence about whether or not I sell that.
Yeah, the I feel like a couple months ago the whole like shiny new token thesis was quite a strong one. I mean, I think Celestia really was a good job, like was a good example of that. Like that token just ran like no one else expected to, and it was like at least in terms of sentiment, it was largely because it was like something new that like I would bet like 95% of people can't tell you what Celestia is, but it was new, it was
No, and this
shiny.
modular, yeah, and like dude, like the Cosmos, everything in Cosmos is modular, right?
Mm-hmm.
Like it's not like Celestia like invented this, but like yeah, whoever like Mr. and Mrs. Modular, whoever coined that term was brilliant, and people
Yeah.
just like ate it up. And there's something to be said for like boomer tokens. Like we looked a bunch of DYDX versus
Mm.
Ribbon out of the fund, and DYDX there's a lot to like. The team is awesome, the product is good, people use it, and part of why we just end up being like, you know what, like Ribbon we think has more upside. It's just like DYDX is like boomer DeFi.
Yeah.
Like, what does that even mean? like, like, like you're trying to like analyze fucking cash flows on this thing, and I'm just like, oh, it's like boomer DeFi. Like, it doesn't really mean anything. But like, I don't know. Ribbon's the new thing. Avo's the new thing, and like it's at a higher growth curve. And these things are reflexive, right? It's like the price goes up, so the rewards for using it go up, so more people use it. And like I don't know. There's having the new thing like is a clear premium.
Yeah, yeah, 100%. I I feel like I haven't really seen any reason to like go against that. You know, at least like it's one factor. It's one pretty big factor when it comes to
Yes,
comparing two things.
but I don't think it's universally true because like ETH is clearly not the new thing, and I think ETH is gonna fucking rip. Like I think ETH will melt faces from here. Um,
I certainly hope so.
but like yes, yeah, I do
I
too.
would up until now, it's
You know,
definitely been like I mean, compared to everything else, like it's been nothing too special. I would say.
yeah, but I don't know. I'm optimistic like the narrative comes back around. I also think part of it is just like if you believe that more like trad money, whatever you want to call it, kind of comes in through the ETF, ETH is like the only profitable token. Like if you're trying to do like a DCF or kind of any like traditional like equities valuation analysis on tokens, ETH is the only one that makes
Mm,
sense.
yeah.
So I don't know. Maybe I'm just talking my own bags.
No, I'm always in the mood for some good Ethiopium. The Lord knows I need it certainly. I forgot a very important question at the beginning. The like very first question we ask everyone when they come on Exit Liquidity is for their favorite story of them being Exit Liquidity. So, in your time in crypto, what's been your most memorable moment of you being Exit Liquidity?
Um, I mean, there's definitely been a few. Like, I was doing
Naturally.
some like levered yield farming last cycle and like got liquidated, lost like a bag
Interesting.
then. I mean, there's been some tokens out of Lattice, and I'm not gonna like name names, but like, sometimes like we can't sell these things, even if we don't like, even if you know things are not going the way we hoped, and
Mhm.
so like, are we exit liquidity if we're just holding? Like, maybe I don't know.
You're the team's Exit Liquidity in that case.
Well, yeah, hopefully not. But yeah, there's probably some other good one. I mean, I think honestly, a Coinless like being too close to like these teams and like every protocol team's kind of disorganized. Like, I knew this Solana team from like since 2018. Bought some Soul Liquid after the sale, like sold it at like a 10x, but like fucking $5. Like, I don't know, definitely have been too close to the metal for a number of things, and it's just like caused me to make rookie mistakes.
Mm. Yeah, that's a problem that I definitely feel like. I mean, on a different scale, but like I think being too close to stuff is like frequently when you spend all your time just staring at this one thing or these one couple things, and then uh, you just end up like over managing this stuff, and like you end up hurting yourself rather than actually like making a more informed decision. I feel like that's a problem that's like all too common today, especially when there's like millions of things going on. It's a challenging one for sure. Definitely has led to
100%.
a fair share of exit liquidity moments through that. Um,
100%.
cool, man. We're coming up on time here. I want to start to wrap up. I don't know if there's any. We usually like to give a few minutes at the end. If you have any closing remarks, any comments, anything you want to shout out to, I don't know, maybe some companies looking for funding or some aspiring VCs out there. Anything you'd like to put out there?
Um, I mean, I think we like, yeah, to hype up a portfolio, like one of the more public investments we made over the last year is Karate Combat, which is like this, kind of basically UFC competitor that has like a native token that governs the league, but probably more excitingly, you can like gamble on it. So these guys have built this gambling mechanism they call up only gaming, where basically you can't lose your principal, but like you can bet your basically stake your tokens and who you think is
Mm.
going to win a fight. So they've started to do these fights with like crypto influencers, like they did one with BitBoy last month, and they have a big fight coming up at Consensus in Austin in like 2 months. So I think you can get like a little bit of karate tokens just from like downloading the app and like playing around with it, but definitely one of the more fun things you can do with crypto today.
What was that? That was karate. What was that called? Karate combat.
Yes.
Okay, interesting. Haven't heard of that one. I'll check it out. Definitely, the whole like lossless uh, XYZ is something that I feel like hasn't really taken hold yet. There was like Pool Together, which was biggish for a little while, like lossless lottery. But besides that, there's a lot of use cases that still
Yes.
haven't been explored with just like commoditizing staking rewards. That would be interesting to see take off in any regard, really. I think as like a pretty solid consumer app.
100%.
Cool, man. Well, again, thanks for your time. Really appreciate it. This has been another episode of Exit Liquidity with Lattice Capital this time. Regan, thanks, man. This was a lot of fun. Appreciate you coming, sharing all your ideas.